Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Tuesday and it is Turnaround Tuesday, January 14, 2025. We are looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on that docket today? It certainly was a turnaround Tuesday. She was up, down, all around during the trading day. We'll get to that in a moment. First, a little housekeeping item or two. We've got a holiday coming up next Monday for MLK Day on the 19th. Martin Luther King. The market is closed for the holiday. That is next Monday, the 19th of January. We are also on the brink of earnings season. That's important information. It should add some volatility to the tape. This morning we had the PPI data shuffle. Tomorrow morning on Wednesday we'll have the CPI data shuffle. By the end of the day, the market traded up, or closed up, I should say, from where she closed yesterday. So we had a touch, just a tiny inch of touch, called follow through, but she was up, down, and all around. So therefore, we're not going to make a federal case out of it. We're going to say she closed slightly above yesterday's close. Fair enough. But certainly no material change on the chart. Taking a viewpoint from a weekly chart perspective, let's just pan back a little bit and say, hey, where are we? Well, last week she closed below the 20-period moving average, and this week she remains below the 20-period moving average. That's important information. What you have here is a convergence of a couple of spots. You have a big-time breakup candle low at 567.89, call it 568, give or take. And you also have a former breakout area coming in here at 565.16. So that general area is very important for the tape from a weekly chart perspective. Again, plenty of volatility and tape this week where we have the CPI data shuffle on Wednesday. We've got earnings season coming up. We got the Fed coming up. We have no shortage of volatility, data, and information. About a little intermission, we're talking JB Hunt. We're talking lazy swing trader, automagical algo system. Entry alert 173.27 average cost. Exit first profit base hit opportunity 181.25 today. Makes it now a risk-free, emotionless trade. Base hits put you in the Hall of Fame. The trailers are where we make the real money. Lazy swing trader, automagical algo system. How does it work? Traders get access to a watch list. They know what's coming close to their entry targets. Once an entry target is hit, traders get an email and text alert. They get exit targets right away. They get stop loss numbers right away. All the open trades are on the board. All the closed trades are on the board. The watch list is on the board. Everything is there for the trader. Lazy swing trader, automagical algo system. The whole thing is automated. That's where the magic comes in. Let's go over to Inside the Numbers and see who made money today inside the numbers and in the live room. It was a pretty cool morning. We had one short, we had one long, and we won them both with zero heat. Heat means we were never really out of the money by more than a couple of pennies. So let's take the first stuff on the board. The first thing we do is define an early pivot. Today it comes in at 582.60, the early pivot. Right of the vertical is today's activity. Here's an SPY 5-minute chart. The green line is 582.60, representing the early pivot. You can see right here, it came right down to test it, bounced off the pivot. A target and support, an exit opportunity for shorts. Why were we short? Hold on, there's more. Above the pivot, the door is open for 584.50. 584.50. And you'll see later in the notes, it's overhead resistance. They're not going to just waltz right on through that area. We had a flip side situation down at 580.30. Look what happened when that target was hit down at 580.30. ricochet right off of it. Important numbers, good to know. Let's see what else we have in the notes as the morning grows on. We had the PPI 830 dater shuffle. The dater was out. They ripped them right back up. They went all the way back down to the flat line, ripped them right back up after the thieves in the morning were already goosing the tape. 907, 584.50 to 585.85 is an overhead resistance zone, give or take. It's the type of place where they should not be able to simply waltz on through without a reaction back down in the other direction. 907, 23 minutes before the opening bell hits. What happened? They spiked a little into 584.50, came right back down to do what? Run a test of the pivot, right back up to the same place, 584.50. You know that it's overhead resistance, never really looked back, never got back up there by the end of the day. Interesting information. It pays to have your numbers. But wait, there's more. This is a chart of the ES, or the E-mini S&P Futures March expiration contract. Just to clear things up a little bit, let's go to the hourly chart, and let's take this low here for an exercise at 58.13. That's 5,813. And we're going to plug that into the magic calculator, and look what's going to happen here. First, we're going to put it in the right spot. It belongs in the pivot low, not pivot high. It was, in fact, a pivot low, 58.13 down here. So what happens is you get a readout, and we're going to focus in on the 59.09 area, 59.09. Now, this low was from Monday, and the high today was exactly 59.09.75. Kind of spooky how that works, isn't it? Magic calculator. How does that work, you might ask? It's a formula, and it works pretty well, I might add. Pause the video, read the notes, go back to the chart, and double check the work. It's all in here. The morning session, all the numbers you need to find success trading in the S&P during the trading day. Traders asked in the live room, would you buy the gap? The gap was at 581.55, give or take. I said no, I'd let him spike the gap and get to the next number in the sequence, which was 580.30. And over here, this was the gap. They traded through the gap. They traded right into 580.30 and bounced the tape right back up. So our first short trade of the day was up here, and our long trade was right here toward the end of the morning session. We'll issue that a, how do you like, dem apples. Pause the video, read the notes, go back to the chart, and double check the work. It's all in here each and every day. Plus, we have stocks on the move. That will populate a lot more as we get into earnings season. But today we had SIG, or Signet Jewelers. Let's go take a look at what happened at 59.85. Here's a 5-minute chart of SIG getting a buzz cut at the opening bell, and you can see what happened when they came into 59.85. Maybe hard to tell at first blush on this chart, but they had a $3 rip, which is about 5% in a matter of minutes. You could see here the high in the second 5-minute candle of the day, $62.80 off an entry of 59.85. How you doing? It pays to know your numbers. Just wait till earnings season. It's a coming. What else do we have inside the numbers? We have the table of markets, a dozen markets covered. Pause the video. Double check the work by looking at the charts and seeing what happened at some of these numbers. Not every number is going to get hit every single day. These are the important numbers, and when the market comes into one of them, we can expect a reaction. The first order of business in support or resistance is the market stops going in the direction it's going. The second order of business is it either eats time off the clock or goes back from whence it came. What's going on over in Camp IWM? The IWM is my favorite market leading indicator. And guess what? We had follow through today, up over 1%, about $2.50. It's follow through. We did not have institutional participation, but we had follow through nonetheless. Price is the absolute arbiter in the end. Favorite market leading indicator up 1%. In the end, she bounced off and reversed at the 200 period moving average on the daily chart. Staying above the 50-week, this is the weekly chart, 50-week moving average will be, as they say in the trading parlance, constructive. Better to get back above the 20-week moving average to put her back in a solid uptrend for the bull case. The weekly chart is in an on-time type of situation, isn't she? How about follow through in the team transports, the folks down at the transportation department? Up 1.3% today, up 209 points. She's working on breaking the chain. Remember what we said? Here's a pivot high. Get above that pivot high. It opens the door to a breakdown candle high. Above the breakdown candle high, you're above the 100 period moving average, and you're breaking the chain. The chain being the bearish flaggish pattern in this channel here. Breaking the chain, at least temporarily, takes the bearish case off the table. Back above this breakdown candle high, we're talking 50 period moving average and back above all the moving averages on the daily chart, aren't we? Yes, we are. Clear things up by looking at the weekly chart, back above the 20-week moving average. You're going to challenge the weekly chart breakdown candle high, and once again, above all the moving averages, trend is what? Trend is your friend until she throws your shit out the window. What about the Q people? Closed below yesterday's close. That's not necessarily bullish, but we're not going to raise a red flag just yet. Let's also take a look at the weekly chart on Team Qs, and guess what we have? We have the Qs coming into the 20-week moving average and bouncing off of it thus far this week. We don't know how the week's going to close. We're talking thus far. We have the information we have. We take it at face value. The daily chart would be constructive back above all the moving averages, namely the 50 for starters. Just keeping in mind, weekly chart pullbacks happen. Look, market goes up, pulls back. Market goes up, pulls back. Market goes up, little pullback shimmy here. Market goes up, little pullback into the 20 period. This is a weekly chart, 20-week moving average. We don't know whether it will or won't hold yet at this stage, but this is just a continuing thing that's been going on and on and on. Market goes up, pulls back. Market goes up, pulls back. The uptrend is intact above all the moving average, certainly on a weekly chart. Correct? Yes. What's going on with the financials? Up 60 cents today, 1.25%. We've got the banks starting earnings season. And if the financials can recapture $49.90, we're calling it $50, guess what? Puts them back in the bull case above all the moving averages. The trend is your friend, all that stuff. Weekly chart, XLF comes back into the 20-week moving average, runs a test, threatens the weekly chart breakup candle low, doesn't quite get there, reverses. We'll see how the week closes. This could be a spike in recovery of the 20-week moving average back above on weekly close, and the weekly trend is what? Intact. Write that down. Put it on a sticky note. What about smash mouth? Well, might as well stay on the theme of the weekly chart. You see this triangle? If she stays below this triangle, this is trouble. Back inside or above this triangle is the bull case. Staying below it is the bear case. She's basically out of time. This is the final week in the triangle. So look for a move either this week or next week. Either break above, we had a false breakout so far, or break below. SMH, triangle pattern, Philadelphia Semiconductors, pretty good proxy for the tech space as a whole. I think we ought to continue to pay attention to this. We had some volume on the fake out breakout situation last week. Have I told you how much I appreciate each and every one of you? Without you, these videos would not be possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.